This week, the Fed is supposed to meet to decide to lower interest rates or not. Generally, when this happens, prices go up if they lower the interest rates. If they don't, the interest rates will possibly make asset prices go down because people get scared that recessions happen during high interest rate markets. So that could mean the prices of crypto or prices of any asset you own can go up or down right now because of this decision. And one of the reasons I created Stack in general is because I didn't like having to be at the whim of knowing that this information is about to come out, guessing which way I thought it would go, timing it right, having money in the market at the right time when it's going up and not when it's coming down. And that's where part of my strategy is built into the AI and the automations is just dollar cost average. If the prices go up, you have more value going up because we used smart leverage. So we get three and a half times more for our money. So when the prices go up, we make more money. If the prices come down, we shift some of that Bitcoin and Ethereum back into dollars and let the prices fall. And if we have to sell all the Bitcoin and Ethereum, we do it, because I'd rather buy. So let's take this scenario right now. We're at 114, 15, something like that. And the Fed decides not to lower interest rates. And the prices start to drop. And let's say you have $10,000 in a Stack wallet, and the prices start to fall, and we start selling at like 9,500, let's just say. Now the prices come down to 70,000. Wouldn't you rather have $9,500 to buy in at 75,000 than just have your $10,000 portfolio go down to $7,000? So that's the whole idea. It's better to stay in the game with more money. And actually a person from Wall Street, when I spoke to them about what I'm doing at Stack, she said, so you're amplifying upside and lowering downside. And I was like, yeah, pretty much. And the idea is, yes, there's no silver bullet. So what does that mean? That means if the prices fall to 70,000 and then rise right back up in less time than the AI dollar cost averages back in to your investment, then yeah, you can lose some money. But if Bitcoin falls 70,000 and it stays there, and now you need money, one, you don't have money because that asset fell in value, and now you don't have enough to spend it, so you're screwed there anyway. But then if it goes back up, you'll get your money back. And that does happen. I've seen that happen. This I've been live for over 2 years, so I've seen that happen. But the real thing that happens and everybody worries about is the 70% drop anytime. And this could be a week where that happens, right? Like if they say something that the market does not like, the price of Bitcoin and Ethereum and all this can go down 70%. It has happened multiple times. So if you got 10,000 and it falls 70%, that means now you got 3,000. And let's say you needed money during this time, because what ends up happening when the markets fall is possibly recessions and stuff like that. And that's when people need money. So they end up selling at the lowest value possible. And that's where it happened to me. So I know, and part of it is the emotion of it all, and not deciding to sell earlier because you think you know better than others. And I don't try to think I know anything now. I just let the AI sell when the prices are falling a certain percent, and protect my loan and keep growing my health score and my wealth score, now we're calling it, so I can borrow more money and I have more money to spend if I need it. So again, if you don't know, like I'm sitting in a Tesla because this system has worked for 5 years plus, and the Tesla is like a minor way of visualizing how much it's worth. I'm not showing people my portfolio because I'm not a white YouTube influencer. I can't be showing how much money I have. But the truth is, I couldn't have done this if I didn't use my own application. And I have many people. I'm going to start showing wallets though. I won't tell you which one is my wallet, but I'm going to start showing you wallets. And you're going to see how this works. And you can decide if you want to try it or not. You can try it with any of my money. You can try it with $10. You can try it with $10,000. You can try it with $100,000. So, but the overall idea is you need to get to the point where you understand all of this stuff. Because whether it's crypto, whether it's real estate, whether it's stocks, you're going to come up on a time right now where either prices are starting to rise or they're falling. And always there's some form of that. It's like an ocean. But this time right now, when the Fed makes decisions like this, we get tsunamis, right? So they can trigger an earthquake under the water that triggers a tsunami, and you have to be prepared for that. And I just realized I don't want to be in a position where I need to decide, because emotions make it hard to decide. I've seen my portfolio go up crazy, come right back down, and I didn't do anything. So is profit really profit if you don't take it? No, because if you got 10,000 and it turns to 20 and then it turns back into 10, did you really make that money? No. But if it turns to 20 and you sold some at 8 versus none, and you paid down some of your loan, if that's what you're doing, if you're using leverage like we use, then that's a win-win. You sold some, and that's what the app is built to do, to take the profits when it sees them, to protect the downside. And weeks like this coming up are super important for this type of move, because the truth is, you'll see it over and over again. If you look in history and look at the timelines and look when these announcements are made and how the market adjusts, these are good times to be in the market or bad times if you don't know what you're doing. And I just know most people don't have time to think about this and look at this. Now this has become my full-time job for 5 years. So I look at this stuff all day, every day. And even me, I don't want to have to look as much as I have to look. And I'm not going to look eventually. Right now I'm still building up this app and trying to get to thousands and thousands of customers. So of course I got to look at this stuff. I got to plan. I got to think about how the AIs can do better and you know, grow the company, all of that. So I'm going to be looking until I hire people to replace me to do those things. And then my portfolio will just be managed by the same AIs that manage yours. And that's where I see this going. And then eventually the ultimate is this portfolio will cash flow for me and give me kind of like a dividend, the way dividend stock investors do, or people who are retired, right? If I get to a point where the portfolio value, I can take out money every month based on a portfolio value, then I'm free from having to work for my money, right? My assets will pay for my life. And that's the goal we all should be after. And of course, getting there first means understanding how to invest, because it's almost impossible to work the amount of years and save the amount of years it takes to get to a portfolio value where you could just have enough to live for the rest of your life. I don't really know how that's possible unless you make a lot of money, which is possible there, right? Like if you're a football player and you make $20 million, okay, you made it. Now you can live off that the rest of your life. The problem is, if you're a football player, baseball player, basketball player, your lifestyle goes up. So now you have to pay more per month to live. So does 20 million keep you in that lifestyle forever? So that's the other hack. Figuring out a lifestyle amount that you want to live at and make sure you can get to a number that lets you live that every month for the rest of your life. And that's where all of this goes into. But again, this Fed meeting this week will have an impact on how fast you get there. It could either lower for a time, right? Because if he says something nobody likes in the stock market, real estate market, crypto market falls 20, 30, 40, 50, 60, 70%, that will feel like you're farther away from your goal. But the truth is, it just means temporarily you are. If you stay in the market, you got conviction in your investments, they'll come back up. But with me, I just don't want to have the emotional choice. I don't want to have to deal with that. I'd rather have the AI set. Okay, if you see prices falling and it's lowering my net worth, sell and then buy back in, because that means the prices are falling. So I should be able to make some money if I sell at that price. The price is falling, I buy back in, and we're good to go. So if you want to understand how I'm sitting in this Tesla for free and it's about to make me about $100,000 minimum over the next 5 years, check out this next video.